Hey guys, I'm NicholasLive, and with me is John from Crypto Patterns and David, the 30-year expert trader. We want to tell you how we're handling this very bearish market and how we think the market will look in the near the future. Now, John, want to tell us what you got right there and what happened the previous days? Is this a safe place to go long or short? What do you think is going to happen?
Okay, Nicholas, thanks very much. As Nicholas said, my name's John. I'm with Crypto Patterns, and we try to keep people on top of the market, keep them safe, and help them stay profitable no matter what's happening. And right now, it's a very dangerous time out there. So we wanted to put out a broadcast and let everybody know a setup that offers a trade opportunity. And yesterday, we shared with our subscribers that it was a good opportunity to go long, actually for the last couple of days, but especially yesterday. And our long trade, just to show you the current setup, our long trade started in about 6,000 level. We were right about down here, and we saw the breakout. And we actually called for a top at about 8,200. So right there was the pattern from yesterday. The pattern got exceeded by quite a bit, and as it often happens, these tops of patterns get retested. So we are very fortunate to have a pro trader, David, who handles all market conditions, has seen all this come and go before, even something as volatile as crypto. And I'm going to show you the setup, and he's going to tell you how we would trade it. What we've got set up pattern-wise right now is we have what amounted to a long bull flag that pulled back, which bull flags do, broke into another bull flag. And what that wound up setting up, I only show you that to show you that the conditions were very bullish up until very recently. And what that set up is a pattern that most people would look at trading as a bullish pattern, which is called a cup and handle. Let me draw it for you real quick. This V shape is actually considered a cup because it kind of makes a full cup. And the small piece here is the handle. So that usually means that you're going to see a lot of upside. They often break out to the upside and go up as far as the handle goes, as the cup goes to the bottom. So that's a big possible gain. But what I want David to walk us through is some other things that you also want to be aware of in the market, because when you see something go up like this, and instead of the explosive move you normally see on a bullish pattern like that, you see it drifting back down to retest that breakout. We are right now at critical levels. So you need a pro trader to help guide you on how to manage this thing. And with that, I'm going to turn it over to David, and he's going to walk you through how we'd handle it. David?
Thanks, John. Yeah, the way I see it here is actually for the short-term trade, the safest trade is probably to have a short trade on. And I think John is going to draw as I talk, but if we have a trend line that just comes from back about a week or so ago, you can see that the overall trend of the longer term, other than the past day, has been sloping downward. So this also is going to provide us a little bit level of resistance, and we can use that as one of our stop points. In addition, we've often targeted over the past several days the 8,400 level as a key level. You can see our long trade rallied right about exactly to that level, broke through very briefly and returned. So that's another level that we can use as a stop level for our current short. So as we're speaking right now, I'm seeing a 78.45 print. Let's just use that as our initial short position. And that's our entry. For conservative investors, as we said, we can have a stop price just above that 8,400 level. It's going to be about a 550 point risk there. And then for the more aggressive ones, you can go a little bit higher up to that downward sloping trend line, which is going to come in right now at 8,600. Obviously, over time, that's going to decrease. There's going to become a time that the downtrend is going to hit at 84, and that should provide the ultimate in resistance. And our target on the downside is going to be that congested area just above 7,000. We don't know if it's going to break through or not. We don't know if it's going to get there, frankly, but that's a good level to put in as our target. So we're, again, targeting about 850 point gain and risking about 550 on the for conservative investors on the stop price.
Let me add, John here again, from a pattern standpoint. So anyone interested in seeing how these things might play out once the highest probability trade is finished and we hit that target at 7,000, you have a decision to make. How much are you going to take off? Are you done? If you met your target, there's the profit you expected. Now wait for the next setup. Well, from a pattern standpoint, probabilities increase that we're going lower once we get below the handle on a cup and handle pattern. That's called pattern failure. So we had a pattern here that showed a big cup, a handle, and that usually explodes up quite a bit. If it comes back down and goes below the handle, that's normally where you'd set a stop on a long trade, which we're not talking about today. But why do I even bring it up? Because if we go below the cup, usually it drops and tests the bottom of, if it goes below the handle, my apologies, it usually goes and tests the bottom of the cup. So David, spend a second and talk to folks about, position management. What might they do when they hit that first target if they want to see if they can play it for the extra potential pattern failure that takes them back down to retest where we started?
That's a good point, John. A lot of times what I'll do, and it'll depend on, how the market looks at that time. We've had our target set, and initially I will always take a third of the trade off at that point. A lot of times I'll take the whole trade off and move on to the next one, especially short-term trade. But if you feel like it still has a chance to test that bottom, and here is a chance, a pattern that would support that theory, then maybe I would take a third off. I would move my stop down from whatever my initial stop price was to the original price that we put the trade on, which was this current 78.50 level, and then move my next target down to take either another piece or the entire position off near the bottom of that cup.
And let me finish that discussion by saying the next target is our current lows. So what we all know from patterns, and our subscribers all understand, is when lows get tested and taken out, they usually don't stop there. So it's a very, very important pattern, a very, very important time. And if we do hit those lows, there's risk of going much lower. But we're here to talk about how to make the most money safely. And so you've got two nice targets where you can position manage your trade and never really risk losing money once you're in the profit, and maybe make a whole lot of money if this thing wants to go back down and test the current lows.
So if we want to make this like super easy in simple words, if I was to see the price drop from under 8,000, it's very likely that it'll keep going even below 6,000, right?
Well, we think that. Let me interject there. It's going to head towards that direction, but I'm not sure I would make the bet that since it's trading off of 8,000 and going down now, that it's going to go all the way to 6,000 and below. That's why we have that first target in the 7,000 range, and why I would take off at least a third of the short there and roll the stops down. We want to lock in profits, and we're looking to bank winners, and we're looking to hit a lot of singles and doubles. We're not shooting for home runs all the time. We will leave a piece of that on, like I said, a lot at 7,000 to see how it tests 6. But and we would probably take another piece off it, just above that 6,000 range. And if it broke through, we'd have a small piece on that would go and continue on our short, and we would keep taking small pieces off and roll our stops down.
So Nicholas, to give you a numerical review of that, we're already below 8,000. The first thing to watch for is if we, first of all, obviously stay safe. And if it wants to go up, you got to get out of this trade. I mean, that's why we set a stop loss range up there between 84 and 8,600. But the first thing you can watch for to see if we're on track for something that might get bigger is the bottom of the handle, which is about 7,200. So that's your first indicator. If that wants to drop below that, it's very high probability we'll hit that first target at 7,000. But that's why you're talking to a 30-year professional trader, because, newbies will just stay and say, oh, it's going to drop forever and I'm going to try to make as much money as I can. You take some profit here. You make sure you make this a winner.
It's all about management.
If you decide you want to go further, or if it decides it wants to go further, you're still in the game and you're going to make plenty of money, but at least you've banked some profit. And if it decides because they can move price anywhere they want, anytime they want. These patterns are just probabilities. There's absolutely no guarantees. So if they want, let me draw it very quickly. They may go there and take it up to, here. That could be it. We don't want to stay in for that trade short. So that we take some money off and we watch and see what happens. And we've got our plan and we execute it. And that's where, David's so invaluable to our services, because he can help you understand where you want to take, where the best levels are to take your profits and make sure you're going to come out with those singles and doubles and make good money over the long haul.
Let me just add real quickly that there's, in addition to, like this is a good example. It was a trade that we had set a 550 point risk limit on, a stop limit, and there's an emotional toll to be paid in addition to a monetary toll to be paid. When you put a trade on, it goes your way. It goes your way by twice the amount that you've risked, and you don't bank any capital. Something like that, where you see them go your way, and then it flips around at, maybe it flips around above between 6,000 and 7,000, and runs right back up to 9,000, and then you're stopped out.
Couldn't do that.
In addition to the amount of money you lost, you start second guessing everything that you're doing, and your pattern recognition and everything. So yeah, it is all about risk management and.
So, David, we're having some technical problems hearing you. I don't know if it's the moving around or whatever, but you're in and out. But now you've seen everything that's going on up to the minute, real time. You can manage this trade. If you're not a person who is comfortable shorting, you've got really valuable information here to know when to get to the sidelines. You can watch these numbers, and that's as good as making money is not losing money. So if you see this thing fall, below 7,200, you don't want to be long. That's not a good time to be long. So maybe you get out even sooner, but that is a key level that could really lead to some big drops. So it's always good to know the long case and the short case, and believe me, there's always a pattern that can support both. Right now, the edge is we're going lower, so we wanted to show you the most high prob trade. But even if you're never going short, knowing how we would short is very helpful to manage your long trade.
And if I didn't want to go short and just wanted to go long, and at a later point, anything that's consistent around 7,200 is a safe bet as long as it doesn't go under, right?
Yeah, I mean, David, you want to let me? Or is your?
I think that's a really good level. That if it got down to that 7,200 level, I would feel much better about initiating along there. Again, depending on how it got there. If it just ripped down 500 points, I would be a little concerned. But there are some good safe areas that you can put stops in below a 7,200 bid, looking for a rally back up to the 7,800 or 8,000 or 8,400 level. So there's several opportunities there for you to be initiating a long position. I like that position of 7,200.
You could do a trade that looks something like this: safe trade entry around 7,450. Let's call it the 7,400 range. You could get in a little earlier, and you could have a stop. David, what would you recommend? 7,150. Anything above 7,000 at that point.
Right, I think exactly, and it depends on your level of risk tolerance. If you want to make this a little bit longer term trade, you could put on a trade at in that 7,400 range and look for a rally back to this intermediate high we had of 8,400, and put a stop down into this just below 7,000 range and risk 400 or 500 points to make 1,000.
Right. And we've developed, Nicholas, an educational series that is going to walk people through how to decide these things, in almost every case, where they can find those windows where you can put money in without saying, I'm going to just leave it in no matter what happens, which is really how most traders get burned.
Oh, so it's not a place, especially in this market, to go all in either direction. It's all about managing your position and taking the small cuts.
Right.
Right, and I would add, Nicholas, like you said, I mean, if there are people out there that have no idea about shorting, no desire to short, and only want to be long, but knowing these patterns also allows you to have much better levels of entry. Like you suggested, the 7,200 level is a much better level of entry than someone looking at it right now and saying, oh, I think 7,800, I'm going to buy it now. Just, you can wait. The good thing about the crypto land is that it provides plenty of opportunities for entries and exits. If you don't see a good one and you're only a long trader, just wait. Another one will present itself very soon, probably.
And a final thought that I think your viewers will really want to know, I'm amazed at how many don't know it when we share it with them, is you study the patterns for Bitcoin, and in 75 to 90% of the cases, they apply to almost every altcoin you're looking to trade. The market tends to move with Bitcoin, especially the large altcoins, Litecoin, Bitcoin Cash, Monero. And so always keeping Bitcoin's patterns and targets and trades in your sights makes you a much better trader no matter what else you're looking at.
Exactly.
You have to have that in your sight because, like John said, that is dictating the market. And if you put patterns, the different coins next to each other or look at them one after the other, you're going to see they all have the same shapes. They'll have some differences to them, but a vast majority of them, the overall shape looks very similar. And the further term you go and look out, the more you'll see that.
Awesome. I think you guys definitely need to subscribe and get our second private video, which will be emailed out to subscribers. It will not be publicly listed like this one. And definitely stay tuned for more important information and knowing how to feel this very aggressive market right now.
Thanks very much, Nicholas.
Thanks,
Appreciate the chance.
See you guys later.
Thank you.
Okay. We're all done?